banks rescued by the central bank 18 months ago are expected to sign Memoranda of Understanding or MOUs with preferred investors this month. On average, the shares of these banks were up almost 50% in January as investors speculate any deals will be positive. While some analysts see some value in these banks, others are not so convinced.
If you look at the forward earnings multiples, most of the rescued banks are trading at single-digit PEs compared to the healthy banks within the sector. And when I say single-digit PEs, most of them, if not all of them, are trading below 5 times forward 2011 earnings. And if you do a comparative analysis of the healthy banks against the rescued banks, for an equity investor, you find out that the rescued banks are trading on a forward PE of about 15, 14 times earnings, whilst the rescued banks are doing about 4.2, 4.3 times forward earnings.
My view is what is the value of a bank? Okay, value of a bank is equity. A bank has negative equity, reading between the lines. As an investor, the bigger risk obviously will be earnings dilution risk. Or should I say the mere fact that acquiring one of these banks will to a large extent delay your ROE recovery in the near to medium term.
The banks seeking fresh investors include Union Bank, AfriBank, FinBank and Intercontinental Bank. The others are Bank PHB, Spring Bank and Oceanic Bank. Prior to the intervention of the Asset Management Company of Nigeria or AMCON, huge losses related to bad loans and other insider abuses left these banks with negative equity capital, threatening their very survival. Local lenders, including FCMB and Access Bank, are thought to be among the preferred bidders. But considering the impact of the banking crisis on the operations of these lenders, what exactly are new investors looking for?
For those that invested pre-crisis, I'm sorry, we just have to swallow those losses. But for a new investor, I think there are opportunities because what we'll see is AMCON is really focused on bringing these banks to a level where they become attractive for new co-investors to come in. Attractive in the sense that they're going to have a cleaner balance sheet, okay? They're coming at a relative discount. So anybody coming in and is able to map a very strategic path for these banks, I think would be winners going forward. For the smaller banks, if they acquire or are able to merge with such a bigger entity, I think it gives them a quick path to growth, quick path to inorganic growth. But for the more established players, I think it is a way to defend market position and fend off possibly new entrants.
One question worrying current shareholders who are in the dark about the valuation used in the process is the question of price. The valuations used in the Memorandum of Understanding are based on the financial positions of these banks prior to the intervention of AMCON. But shareholders say it's unfair to use that because following the intervention of AMCON, many of these banks are in a stronger financial position, and indeed, investors should pay a lot more. Our sources indicate that some investors might be buying up to an 80% stake in one of the banks by paying a small premium above the 25 billion naira, which is the minimum capital requirement for a national commercial banking license.
If you look at where the banks are coming from, with the capital they had, they've been run aground. So it shows there's risk in what they were doing. In the process, when a new investor is looking at this, you have two types of new investors. You have the existing banks who are looking to buy size. And you're looking at new investors who are looking at, should we put the money into a rescued bank or get a fresh banking license? Now, the rescue bank, yes, you get customers, you have deposits, and you have a branch network already. But with that comes a cost base. Now, is that cost base sustainable? For a lot of those rescue banks, it wasn't. And so it was one of the first things you're going to have to address if you do take over the banks. But in a sense, then you can also argue, are the customers remaining with the rescued banks because of the brand and of the rescued bank or because of a CBN implicit guarantee? Now, if when the implicit guarantee goes, are the customers going to leave the bank? Because if you look at a lot of the rescued banks, a lot of their customers are, the big deposits are government money. Now, will it stay after CBN guarantee goes?
The government could also profit from the process. Through AMCON, it will invest close to 3 trillion naira in the process, and some argue that the government could get more for the public naira if the banks are nationalized and then sold to investors in 2 to 3 years. But political and other considerations ahead of the April elections stress the urgency of the process.
The longer the process goes on, the less value you can get for the banks. Because longer process, you have the interim management who are basically there just to maintain the bank going forward. While you have your competitors who are growing, having their strategies going forward, the further behind you remain.
As the process to sell the rescued banks comes to an end, the main critics about the valuation of the banks are the incumbent shareholders. They, to an extent, hold all the aces. They will have to endorse any sale at a special meeting to consider the MOUs before any deal is finalized.